Remember the days when computers struggled to display simple graphics? Those days are long gone, and Nvidia deserves a lot of credit. This company isn't just about making computer parts, it's about powering the future of technology. From gaming to artificial intelligence, Nvidia's chips are everywhere. This dominance has sent their stock price soaring, making headlines and attracting investors of all kinds. Nvidia's story is a classic Silicon Valley tale. Start with a bold vision, add some groundbreaking technology, and watch the company grow at an astonishing rate. But unlike some tech giants that flame out quickly, Nvidia has shown remarkable staying power. They keep innovating, pushing the boundaries of what's possible. This constant drive has made them a Wall Street darling. Investors love growth, and Nvidia delivers it year after year. Their chips power the latest video games, data centers, and even self-driving cars. This kind of reach is rare, and it's why Nvidia's name is on the lips of everyone from seasoned financiers to college students making their first trades. The company's success is a testament to the power of innovation and its ability to reshape entire industries. But as Nvidia's stock price climbed higher and higher, it became out of reach for many smaller investors. That's where the idea of a stock split comes in, a strategic move to make owning a piece of this tech giant more accessible. With the upcoming stock split on June 10th, Nvidia aims to make its shares more affordable and attract a broader range of investors. It's a fascinating story, and we're about to break it all down for you. Imagine you have a delicious pizza cut into 8 slices. You and 7 friends each want a slice. Now, imagine that same pizza magically expands, with each slice splitting into 2. You now have 16 slices, but the pizza is still the same size. That's what a stock split is like. A stock split is a decision by a company to increase the number of shares available by issuing more shares to existing shareholders. Think of it like slicing a pizza into more pieces. The pizza itself doesn't change size, and neither does the overall value of the company. But instead of owning one large slice, shareholders now own 2 smaller ones. Why would a company do this? Well, as a company's stock price rises, it can become expensive for some investors to buy even a single share. This can make the stock less appealing to smaller investors. By splitting the stock, the company lowers the price per share, making it more affordable and potentially attracting more buyers. It's important to remember that a stock split doesn't change the fundamental value of your investment. If you owned $100 worth of stock before the split, you'll still own $100 worth of stock afterward. You'll just have more shares at a lower price per share. It's like trading a $100 bill for 5 $20 bills. You still have the same amount of money. Nvidia's upcoming stock split on June 10th will follow this same principle, making their shares more accessible to a broader range of investors. In a move that surprised few but excited many, Nvidia announced an upcoming stock split in 2024. This isn't the first time Nvidia has split its stock, and seasoned investors know exactly what it means. The company is confident in its future and wants to make its shares more accessible to a wider range of investors. This kind of move often signals continued growth and success. The split, which will go into effect on June 10, 2024, is a 10-for-1 split. This means that for every 1 share an investor owns, they will receive 9 additional shares. So if you own 100 shares of Nvidia before the split, you'll have 1,000 shares after the split. It's like magic, but instead of pulling a rabbit out of a hat, Nvidia will multiply its shares. The effective date of the split is important. If you buy your shares before the effective date, you will be automatically part of the split. But if you buy shares on or after the effective date, you will buy them at the new post-split price. Think of it like getting in line for a ride at an amusement park. If you are in line before the cutoff, you get to ride. If not, you have to wait for the next round. Nvidia's stock split is a strategic decision, carefully planned and executed. It is a clear sign that the company is thinking long-term, aiming to attract new investors and reward existing ones. By making its shares more affordable, Nvidia is opening the door for more people to be part of its incredible journey. For those planning to own Nvidia stock, the upcoming split on June 10, 2024, is a cause for excitement. It's always a good feeling to anticipate your investments doing well, and a stock split is often a sign of a healthy and growing company. It's like finding a $20 bill in your pocket, a pleasant surprise that brightens your day. One of the main benefits of the split for future shareholders will be increased liquidity. With more shares available at a lower price, it will become easier to buy and sell Nvidia stock. This is especially important for investors who need to access their funds quickly or who prefer to trade in smaller quantities. Another advantage could be the potential for greater dividends. While a stock split doesn't guarantee higher dividends, companies often increase their dividend payouts per share after a split. This can translate into more income for shareholders, making owning Nvidia stock even more rewarding. The upcoming stock split also serves as a powerful psychological boost. Seeing the number of shares in your portfolio multiply can create a sense of momentum and optimism. It's a reminder that you're investing in a company that's on the move, pushing boundaries and shaping the future. Nvidia's upcoming stock split on June 10th isn't just good news for existing shareholders, it also opens up exciting opportunities for new investors. Imagine being able to buy a piece of a company like Apple or Amazon at a fraction of the usual price. That's the kind of opportunity this split will create. For many people, the high price of Nvidia's stock before the split has been a barrier to entry. They want to be part of the Nvidia story, but the cost of a single share is simply too high. The split will make investing in Nvidia much more accessible, allowing smaller investors to get in on the action. The lower share price will also make it easier for investors to diversify their portfolios. Diversification is like having a balanced diet for your investments. It helps spread risk and protect your money. With the more affordable share price, investors can buy into Nvidia without putting all their eggs in one basket. The stock split is already creating a buzz around Nvidia, attracting media attention and sparking conversations among investors of all levels. This increased visibility will help introduce Nvidia to a whole new audience, further fueling the company's growth and success. When a company as influential as Nvidia announces an upcoming stock split, the entire market takes notice. It's like throwing a pebble into a pond and watching the ripples spread outwards. The impact can be felt far beyond the company itself. In anticipation of Nvidia's stock split on June 10th, the immediate effect is expected to be a surge in trading volume. With more shares soon to be available at a lower price, investors are eager to buy, which could push the price up in the days and weeks following the split. It will be a classic case of supply and demand at work. The split will also have implications for major market indexes, like the S&P 500 and the Nasdaq 100. Since Nvidia is a component of these indexes, the split will affect their overall value. It's like adjusting a recipe. When you change the amount of one ingredient, it affects the taste of the entire dish. The upcoming stock split is a reminder of Nvidia's influence not just in the tech world, but in the global economy as a whole. Their chips power so many industries that their performance has a ripple effect on countless other companies and sectors. It's a testament to how interconnected our world has become. Nvidia's upcoming stock split on June 10th is a strategic move that aims to pay off handsomely. It's generating excitement, attracting new investors, and solidifying the company's position as a market leader. But the real story goes beyond the split itself. Nvidia's continued success hinges on its ability to innovate and adapt to the ever-changing tech landscape. They've consistently proven their ability to do just that, pushing the boundaries of what's possible in artificial intelligence, gaming, and beyond. The demand for Nvidia's products is only expected to grow in the coming years. From self-driving cars to the metaverse, the technologies of the future will rely heavily on the power and efficiency of Nvidia's chips. This insatiable demand bodes well for the company's long-term growth prospects. Investing in the stock market always carries risks, but Nvidia's track record of innovation, strategic decision-making, and commitment to pushing the envelope makes them a compelling choice for investors seeking to be part of the technological revolution that's shaping our world. Nvidia's upcoming stock split on June 10th is just one example of the many exciting developments happening in the world of finance and technology. It's a world that's constantly evolving, presenting new opportunities and challenges at every turn. What are your thoughts on Nvidia's strategic move? Do you think stock splits are a good thing for companies and investors? Share your views and questions in the comments below.